This daily market update has been brought to you by Daily Wealth Report. Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is of the nature of general information only and must not in any way be construed or relied upon as legal, financial, or personal advice.
Good morning, traders and investors. It's Wednesday, the 22nd of August, and we've seen the European markets continuing in their short-term rally. However, although influencing the US markets early in the session, selling pressure did enter the markets and the US entered down for the session. As we take a look at the FTSE index, it was actually up 33 points, or 0.57%, closing at 5857. This chart we have in front of us does denote a downwards day. However, this is the CFD on the index and not the actual index itself. It did actually close slightly higher. But what it does reflect is that the FTSE market has continued to trade sideways. We are starting to see a little bit more selling pressure entering the markets, certainly as there was a rejection of the markets at its high of the session, which was attempting to push into a new high. The German DAX is showing somewhat of a similar story. We can see here a candlestick with a very small body and a large shadow on top, so that's a rejection of sellers as well. The DAX did close up 55 points, or 0.8%, at 7,089. So weak buyer activity at the moment, no real sign of sellers entering the market, yet if we're going to see any follow through from what happened in the US, then we will see some selling pressure in Wednesday's session for the German DAX. The CAC 40, again, very similar story here, without any major headlines coming out of Europe at the moment. The markets in Europe are just following each other. As we can see, the French CAC 40 closed 32 points up, or 0.9% higher, closing at 3513. Again, a very strong rejection of the buyers at that high level. Heading into the US, and we can see the downwards day that did occur on the Dow Jones here. It was down 68 points, or 0.5%, and that is a short-term bearish pivot point. We are in an upwards trend, so by all accounts we should be expecting a short-term retracement to find some support. That could potentially be around 13,088 points, or 13,080 roughly. But we can see that this short-term bearish reversal point has occurred at these previous highs. If we were to see any change in trend into a bearish trending market like what had happened back here in May, we do need to see it breaking below 13,080 and potentially down below 13,000 before we have that change in trend occurring. So the Dow Jones closed at 13,203 with a short-term bearish reversal there, and we just need to see how the markets will react in the coming sessions. The Nasdaq index closed down as well. It was down 9 points, or 0.3%, so it underperformed compared to the Dow. It too is showing a bearish reversal pattern. This is actually a bearish engulfing pattern based off these last two candles. It too is a short-term reversal pattern in an upwards trend. So at this point in time, any sort of retracement down towards that 3,000 level is still within an upwards trend. So we can't be jumping the gun just too early yet. And the S&P 500, a very similar pattern again, down 5 points, or 0.3%, closing at 1,413. We can see that rejection there at the previous high. It too is a short-term bearish pivot point in an upwards trend. What this has done to the VIX is it has ascended up quite strongly. We can see the VIX is closed at 1502, up $1 exactly, or 7%. As we zoom in closer, we can see the bullish reversal point that has occurred, and we do need to see more negative activity in the markets for the VIX to rally stronger and attempt to break this downwards trend here. So a little bit of fear has entered the markets. It's not panic at this stage by any means. It's just a little bit of profit taking whilst the markets are at highs, and as the headlines are this morning, the US had hit a 4-year high before reversing in the middle of the day. So there certainly is a little bit of concern that the markets can't hold these long-term highs. That doesn't mean a downtrend, it just means a little bit of a pullback at this stage. As we take a look at the ASX 200 index, we can see the ASX 200 was up 20 points, closing at 4,384. There was a bit of a rejection at the end of the day. We can see the shadow on the top of that candle there, and that's just a bit of I guess, an early warning sign for what happened in the US. We have the SPY futures down only mildly, down by 2 points, so we probably have a lot of what happened in the US already factored into our markets. Certainly based on the fact that we've seen some big dividend payouts in the last few days, and that has taken a little bit of wealth out of the markets as well. So we're looking at a slightly slower start to the day. That doesn't necessarily mean a strong downwards day, but we will be quite cautious with this movement, especially as there was a large shadow on the previous day's candle and after reaching to a new medium-term high. So we do expect some sort of a short-term retracement to pull the markets back towards this 20-day moving average, and then evaluate whether the buyers are returning back into the market to continue this overall upwards trend. Well, that's our summary for Wednesday the 22nd of August. We hope that gives you a little bit of insight into what's going on right now. And if you do have any questions, please feel free to contact us on support@dailywealthreport.com.au. Look forward to giving you an update again tomorrow and wish you all the best of trading.